And thank you for joining us for the second session of our quarterly financial wellness seminar. My name is Chad Feather, your host for today's session. I focus on empowering veterans with essential financial tools. So first of all, thank you to all of our veterans. Just coming off of Veterans Yesterday. Again, thank you for your service, and also thank you to your family for their sacrifice they made for you to be able to serve. Our quarterly session is designed to dive into critical topics every few months. Each session is tailored to a specific financial need. Today's focus is on veteran support. It's in time with Veterans Day, with a special spotlight on VA loans and the unique banking resources for veterans transition to civilian life. We're honored today to have two distinguished speakers, Joel Slagan, President of Timberland Federal Credit Union, and a Navy veteran. Again, thank you, Joel, for your service.
Thank you.
We'll discuss transitioning finances post-service and highlighting resources that credit unions, and specifically what Timberland Federal Credit Union can offer to veterans. And then we also have Johnny Mateo, the President of Core Mortgage Services. We'll then cover VA loans in depth, explain how they can make homeownership accessible for those who have served. And I'm looking forward to that. For both topics, when we're talking about this meeting, one of the things that I heard from a lot of my friends is transitioning from military life to civilian life is difficult. I guess the longer you serve, the more difficult that was to transition. So I'm looking to hear the insights of Joel, but then also how Johnny has helped those service members reach the home ownership. So today we'll start talking to Joel and Johnny just to get to know them better. So Joel, let's talk about how long have you been in the industry and how did you get started?
I've been in the credit union movement for over 20 years, believe it or not. I got started. I came out of the Navy and I kind of jumped all over the place and went into banking. Worked at a credit union, then went back to traditional banks, and then found myself auditing credit unions. And I spent almost a decade in that role, auditing credit unions in Pennsylvania, New Jersey, and Delaware. And that's what brought me to Timberland. I left there, came to Timberland as the Chief Operations Officer, and that was about a little bit more than 10 years ago now.
Okay.
It's been a fun ride.
How long have you been in your current role as CEO?
That is a little over 5 years.
Okay. So what is your favorite thing about your job?
Helping people. I mean, I know that sounds kind of cliche, but I really do enjoy helping people. I enjoy helping our employees. I try to think of new, innovative ways to kind of make it fun for them to come to work. So I kind of use that as helping people as well, but also helping our members. I love to know that I'm able to help someone get into a new car or get into a new home. But even more is establishing a savings plan for them. I surround myself with much smarter people than myself. And one of them, he's not on the call right here, but he's Craig Moore. He owns Happy Valley Financial Services. So he goes actually outside of all the things that I'm able to help people with. He could take it a step further and really build a retirement plan. And I view that as me helping someone as well, just helping them get partnered up with another person. When there's like something crazy with mortgages, again, surrounding myself with smarter people than I partnered with Core Mortgage, and I think that's a big win. I'm able to help them get a partnership with Johnny Mateo and his gang he has over there. So I mean, I love it. I love to help them. Whether it's me personally or me pawning them off onto someone else and creating that smooth transition, that's kind of what I get up every day for, to help people.
Good. Well, I was gonna say, like, I got a guy for that, or I got a girl for that. So
yeah,
it's nice you have those partners. So Johnny, go the same question for you. How long have you been in the industry, and how did you get started?
So I've been in the industry now for 22 years. I started when back in 2021, going into the 22 year. I was working at Penn State University, and then I wanted to go do something that was more in my industry, which was finance, out of college. And I love sales, so it's kind of like the perfect marriage of both sales and finance. So that was great. So yeah, so 22 years.
Yeah. So the same question I had for Joel. What is your favorite thing about your job?
I love my job being creative. There is nothing that gets me more amped than when a client comes in and says, I've been turned down everywhere I went, or the rate that I was offered was off the charts. All of these different things, and then I find a solution, and the people are ecstatic and going to the closings with them, and just to see the pure joy of not having to answer to a landlord anymore. It really is something special that, we take it for granted for those of us who own our own home, that you're not thinking anymore about the paint color and things like that in your home. So that definitely is my favorite.
Yeah, that's my own home is also getting a chance to build that wealth as well. And Johnny, I've heard you say it many times, and sometimes you may not help a person today. It's not a no, it's just not yet. And being creative on, hey, I can help you creative, but these are some things we need to put in line to get to a yes, and helping that person reach those needs, wants, and dreams. So.
Oh, absolutely. I wish that someone had said to me early on in my, when I was looking to buy a home, look, don't worry, I'll help you. That never happens around here, especially banks. You walk into a bank, and if you don't qualify, you're out the door. Now you have to go find somebody else and apply again. So here, there's no application fee like there is in a lot of banks. No application fee, but we will exhaust every bit of, just every creative fiber that we have in our bodies to try to come up with a way of getting you in a home.
Yeah. Well, thank you both for sharing. Now let's get started with our feature presentation. If you have any questions as we're going through, please drop them into the chat for our Q&A session. Joel, let's get started with you and your personal experience after you left the Navy. So, Joel, how did you navigate managing your finances once you left the military? I mean that structured life.
Well, I didn't. To be honest, I was kind of it's hard, and I only spent 4 years in the Navy, so I am nowhere near someone who could probably answer this question better. I can only imagine how much harder it would be after 20 years. But being in there 4 years, having a structure, it is so. It doesn't even sound right to say it, and you wouldn't know unless you were in a situation. You actually crave the structure again, and when you come out, and there is no structure, and so you feel like you're lost. And I remember having that feeling of just being lost. And Johnny just said it. There was no one around back then to help you, to kind of guide you. I just didn't have that. And when you are 23. Especially males, okay? And all 23-year-old males, or if you're older than 23, you look back, I think you'll agree. When you're 23 years old, you know everything. So there's really not anything someone can tell you because you know it all already. And I think from 23, for me anyway, I don't want to talk for everyone, but from 23 to about, mid 30s, that 10 years, I knew everything. There wasn't telling me anything because I knew it. And by my mid 30s, I probably finally realized, now I know it all because I finally realized I don't know anything about anything. I really don't know nothing. So it's a struggle. I felt lost. There was no one there to say, hey, this is what you need to do. And that's where some of my passion, I think it was supposed to happen to me. My passion comes into helping people because no one sat down and said, hey, if you just put 10% of your check away, okay, you're never going to miss it. If you have it just come out automatically, you're never going to miss it. Back?
You're back. Yes, you're back. Thank you.
Okay.
So, technology.
I don't know where I left off. I just kept going.
I think we finished that question. So again, like you said, you knew everything when you came out of the military. When you left, is there anybody who would say, "Hey, now you're being discharged. You're ended your career here for 4 years. here are resources available to you. Is there anybody in the military that's telling you as you exit?
No, no. You go through a checkout process. Now, this is over 20 years ago. They may do it differently now. I don't know. But over 20 years ago, no, there was not. You went through a checkout, making sure that you had all your shots up to date and things like that. But that's it. You finished that checklist, and it was on your way. There was no one to sit down and say, look, these are the things you should really start focusing on. So it just wasn't available. Nothing like it is today. I know that Core Mortgage provides a lot of that knowledge. Timberland will sit down and really give a lot of preference. We actually have an account, not to get ahead of anything, but a Heroes account. So I think it was a blessing that a lot of things like that happened, or should I say did not happen for me. So yeah, no, I did not have anyone sit down.
Joel, again, if I was leaving the military today, what are some of the suggestions you would give to me as somebody going from military life to civilian life? What are some of the suggestions you would give me financially?
I would say I'm going to be a little biased and say get with your local credit union, of course, but I would say establish a relationship with your credit union and or bank. I mean, if you're more into banking, that's fine too, but establish a relationship with a financial institution. That's my biggest piece of advice. And because they have a lot of things there. They have financial counselors, most likely. They have just, loan officers that may have been around, tellers that have been around who can sit down and give you free advice. They're not going to charge you for that. So that would be my number one.
Good. So you mentioned briefly about Timberland Federal Credit Union offers a Hero account. What are some of the if you want to talk more about that, what are some of the other resources that Timberland Federal Credit Union and other credit unions may offer to, like you say, establish that relationship? What are some of the services and tools that you would recommend?
Well, again, sitting down with a financial counselor would probably be my first and I would make that my priority to sit down with a financial counselor, even when you think that you don't need it. Going back to what I was saying earlier, when I was 23, I knew everything. And then it took my mid-30s, I realized I didn't know anything. I just thought I did. So even if you think you don't need a financial counselor, sit down with a financial counselor. It's so nice to have someone outside of yourself to kind of just show a different perspective.
Right.
I think it's worth millions, and it doesn't cost anything at all.
So besides the financial counselor you had mentioned, what are some of the tools that Timberland may offer to our service members coming out? You mentioned a Hero account.
Yep. So we have a Hero account, and with that Hero account, you get a 0.5% off on all your loans. So that's just that extra little edge could mean a whole lot. If you take that 0.5%, convert that to savings, you could really build a very nice retirement plan just on the savings that you get for being one of our heroes.
Okay, good. One of the things that being in the financial industry for over I'd like along Johnny and I both started in 2021. We started very similar to each other. Me starting the banks, coming from a bank to a credit union in my career recently, is I think credit unions do a much better job of financial wellness. So you're talking about the financial counselor, having that person there to come in and have that conversation in a no judgment zone. We've all at one point struggled with our finances, and sometimes it's hard to have that conversation, admit that I'm in trouble financially. I need help. So again, mentioning about that financial counselor and that going and meet that first, I think that is an important topic, and be okay to open up and be vulnerable, I guess. And hey, I made a mistake. I need help, because without asking for help, you're not going to get yourself on the right track to next being aligned to talk to Johnny Mateo about a mortgage. So good. Joe, anything else before I go on, Johnny? Anything else you would like to add that maybe we didn't cover about your transition? Or
yeah, I'm just going to piggyback on something you just said. Credit unions do a better job than banks, and I would say that generally, I believe that to be true as well. And I just want to throw out an example. Credit unions, a lot of times banks, they're so big. Okay, they're very, very big, and they rely on a number, and it's called a credit score. Okay, and that number is very important because it tells you a lot about someone, but it doesn't tell you everything. Okay, some people, it's called life. Life happens. People go through divorces. They go through deaths. Some people have to endure both of them. So things happen. Okay, and at a credit union, and I'll talk specifically, of course, about Timberland. We will sit down and we'll dive in to those things, and we'll get the bigger picture because there always is a bigger picture. So I found myself in a financial mess. Okay, and I had to get out of it. And my thought was, no one's ever going to work with me. Nobody. And a credit union did. And they saw the bigger picture and say, okay, you came out, you got a little lost out of the Navy there, and you went to this job, then you went to that job, and you went to this job, and you went to that job. I think I had 37 jobs inside a year or two, maybe a little exaggeration, but I got myself caught up in a mess, and it was embarrassing. Yeah. But I didn't know that I could go in, and I finally went in. I was my car was going to be repossessed, and that's kind of what, like, I had to go in there and I had to develop a plan, and it was like. And the guy, his name was Joe. I'll never forget it. He's like, look, this happens to millions of people. You're not alone. Like, let's work something out here. And we did. And I think that was like my big turnaround day. So if I may just part my little session here with some advice, don't be embarrassed. Millions of people have been in your shoes. If you find yourself struggling, we all struggle. Some of us just don't wear it. Some of us just won't admit it, but we all go through struggles. And just don't be embarrassed. Come in, make a plan, and your life will be so much better. You'll breathe so much better. It's hard. It's hard coming out of the military. And I know that more than anyone. And I can only imagine it'd be 10 times harder if you've been in there longer than I have. So credit unions are there to work with you. You're not just a number. You are a person, and we will find out that bigger picture, and we're going to figure it out together and get you on the right path.
It sounds like, Joel, that even if they're fresh out of the military or if they've been out for 20 years, that there's going to be some services they can benefit from by coming in.
Absolutely. Yeah, 100%.
That's great.
And one thing, you talk about the 5 C's of credit. Credit score is only one of those. Character is one of the other C's. That's something that will take time to understand that character. All right. Thank you, Joel. So now we're going off to Johnny here, and now Johnny will talk a little about VA loans and how they qualify. So Johnny, give us the rundown on what a VA loan is and how do I qualify?
Okay. A VA loan, you had to serve in the military in 2 capacities. You could have done reservist. You could have been a reservist. Okay. Or you could have been active military. Also, there is one that a lot of people don't think about, is that if you were married to a person in the military who passed away or, war, what have you, the wife also gets the benefit of getting a VA loan as well. So we have, as far as VA loans, we have everything from a purchase, we have construction, we have renovation, for the VA loans, refinances, the streamlined refinances, all of that. But what I love about each one of those loan programs is that unlike everyone else, the veteran gets an opportunity to access 100% loan programs or 100% of their equity, where the other loan programs do not.
Now, if I'm going 100% loan to value in a VA loan, do I have to have PMI?
No. There's all veterans, or actually anyone accessing a government loan, has this one insurance that they have to pay. And the way that I would describe it is paying it forward. Okay. So what happens is this: VA, FHA, USDA, they all have what is called an upfront mortgage insurance premium. It's a one-time charge, all right? Well, not one time, but it's one in which they pay it upfront, They could either pay it as part of the closing costs, or they can finance it into the loan. That ensures to the lenders that are who are putting out 100% of their money for this, that if the veteran were to go into foreclosure, the government will step in and back them, okay, and make the company whole. So that upfront mortgage insurance premium is pretty uniform. The only time that a veteran does not need to pay that upfront mortgage insurance premium is if they are an exempt veteran, which means that they are on military disability. Okay. Military disability negates you from having to have the upfront mortgage insurance premium while everyone else does. It comes out to be, for first-time use, 2.15% of the loan amount, or the loan amount. So if you have a $100,000 loan amount, your loan amount technically will be $102,150. All right, but that money then gets used the next time when another veteran wants to, needs to get a mortgage, and it's a cycle that continues to move forward.
So you mentioned 100% financing. How about I don't have much savings to help me with my down payment? Is there any help available for the down payment?
Yes. There's a couple of ways of going about this. All right. And this is unique to the veterans as well. First one is that you have seller's assist. The seller can help pay your closing costs. But unlike other mortgage programs, with a VA loan, the seller can also help pay personal debts off. So then the veteran will qualify. All right. So what happens is that if you hear, FHA is maxed out at 6% of the sale price. Veterans, if you read about it, it says that it's limited to 4%. That is true and untrue. True in the sense that only 4% of debt. So like if you have a $100,000 loan amount or sale price, $4,000 can go towards paying off some credit cards or other things like that. The other closing costs do not count towards the 4%. So that's fantastic. So literally, I think if you look at it, a seller can help the veteran, with 10, 15% if they wanted to. Not many people understand the way that it works. So they just say, sorry, it's only 4. And then the veteran ends up coming into the table with money that they didn't really need to. So that's one of the ways that we do it. The other way is that if the house appraises for more than what they're buying it for, the veteran gets to use some of that equity to pay the closing costs as well. Okay. So, you can, if it comes in at 110 and you only buy it for 100, you get to use that money to be able to purchase the home. Okay.
That's unique to a VA loan?
What did you say?
Is that unique to the VA loan?
No, and the USDA loan has the same feature, but it's mostly used by the veterans.
Okay. So Joel mentioned, maybe coming out of the service and maybe have some bumps in the road and your credit score may not be where it was. If I look at a VA loan, what is the minimum credit score that I would have to expect to qualify for a VA loan?
Okay. We have in the mortgage industry, we have what is called automated underwriting. Okay. Where we run it through Fannie, Freddie, through this, it's called DU, direct underwriter. And it approves the loan and it actually gives you the conditions and you're good to go. It fulfills all reps and warranties for banks. So all banks will step in to be able to purchase that. I apologize, I lost my train of thought there. But with the VA loan, if they, you know what, I apologize. I lost my train of thought there.
We were talking about credit score.
Oh, on the credit score.
Yeah.
So the credit score, what happens is that it'll deny it automatically at 600. Credit score at 600 or below, it's automatically going to come back as a denial. But there's a thing called manual underwriting. It automatically it steps into the manual underwrite where the underwriter can now underwrite the loan based on a few criteria. Have they made 12 months of rent payments on time for the last 12 months? Do they have enough residual income? Things like that counts as points towards, I use the word points, but it makes it easier for the underwriter to be able to approve that loan. So if you were to look at any chart, 500 is actually the bottom for a veteran. But now, mind you, it is difficult to get that loan at 500 credit score. So 600 is where we want to be. Here at Core, what we do is we immediately, if a person is at 575, 580, we're looking to raise the credit score to get them over the 600, because not only that, the interest rates are reasonable compared to an interest rate at less than 600.
You mentioned interest rates. Do VA loans have a special interest rate compared to other government loans, or is it similar to the USDA and other programs?
Just like I always say that interest is just is just another word for risk, right? They're synonymous. The higher the risk, the higher the interest rate. The lower the risk, the lower the interest rate. Well, VA loans, government loans, have less risk than all loans. So therefore, the interest rate is better. Banks like those. Imagine lending to someone knowing full well that no matter what, you're going to get paid back. That's a very,
low risk.
That loan has very little risk to it. So therefore, it affords that bank the ability to offer a better interest rate than they would for a regular conventional loan, even FHA loan, what have you. The veteran one is the standard. The VA loan is the standard for risk.
Okay. And one of the other things that, working in the finance industry and also my own loans for mortgages, debt to income. Is there a maximum debt to income I can have? I need to, or a minimum, or what numbers you look for debt to income?
Well, it's funny that you say that. Now, if you have to do a manual underwrite, there is a ceiling, a hard ceiling, saying, you know what, all of these other things were bad. We have to make it that it's 41% or whatever the percentage is, that is the ceiling. But I've done VA loans where the debt to income ratio is 57% because we ran it automated and it had enough residual income that it allowed for that loan to be approved, even at over 50% debt to income ratio.
Okay.
We don't ever want to put a veteran in a position that they can't make their payment. So I tend to have my own, it's called an overlay so we had our own overlay of trying not to ever do a mortgage for a veteran that is at over 50%. It would have to be an extreme type of situation, or one that just, they have another person in the household who makes money but isn't on the loan, so they'll easily make the mortgage payment. So I'll look at things like that as a way of making it less risky for the veteran.
In my experience, sometimes working with self-employed individuals, sometimes that income's a little off just because the way their income's reported. So again, that's where it's nice to have that, I guess, the flexibility if you have a self-employed borrower and you're trying to prove income.
Yeah, the unfortunate part is that as far as self-employed, VA does not have the number of accommodations that some of the loan programs would for a self-employed person, because it tries to be as vanilla as possible so more veterans can get the loan. Once you start getting into bank statement programs and DSCR, all of these different types of loan programs that are not on the mainstream, it starts to make it a little bit more difficult for the veteran to get a good deal. So it's just for regular homes, or it's not for investment properties, but for regular homes and second homes.
So earlier, before you and I were having a conversation about the number of VA loans I can have and my entitlement. Can you go over a little bit about what the entitlement and number of VA loans?
Okay, entitlement is based on a formula. So the entitlement, you get, everyone comes in with what's called a $36,000 entitlement. But $36,000 is kind of, you have to look at it kind of like what, you know how when the assessed value of a home as opposed to the actual value, right? It's a different number because it's based on some sort of calculation. That's what happens with a VA loan. A VA loan, you get the $36,000 entitlement. You put it into the spreadsheet, and which I created one to make it easy for me to see how much a veteran can still use on another mortgage when they've already used their entitlement or a portion of their entitlement on the current home that they live in. So I enter the information. It's also based on what the maximum loan the loan is for the state or the county. So here it's 700 now, 700 and I believe 82,000 is the new number for your standard conventional limit before it starts jumping into jumbo status. Okay, so we enter all of that information into the spreadsheet, and then it tells us whether they have to bring any money above and beyond the normal 100%. So there is a limit, but you have to use a lot of it. You have to buy consecutively maybe two, $500,000 to $700,000 homes before you start using up all your entitlement.
Oh, that's good to know. And then, if somebody bought a house within the last year, their interest is going to be higher. As we start to see mortgage rates, hopefully the next year or two, come down, and I want to refinance for a lower rate, and I have a VA loan. Is that a possibility?
Yes. We have what is called the EARL. And basically, the EARL is a low income documentation or no income documentation type loan for the veteran. Think about it. It is better if they're already making their mortgage payment. It is better for whatever lender or servicer that has that loan that this borrower is now paying less on a monthly basis because they're more likely to make that mortgage payment, right? So the EARL doesn't have an income requirement, nor does it have a appraisal requirement. So it's based off of the last time that they appraised the home, and all you're doing is looking to get a lower interest rate. You cannot, or you can, if you came into some money, you can lower your loan amount with no penalty on that, but also lowering the interest rate is another way of getting a better payment for the veteran. So no appraisal, no income. Then they have the regular VA loan. The regular VA loan then allows you to do cash out if you wanted to. So if you have some debt consolidation and you have a tandem of lowering your interest rate plus paying off some debt, that's another loan program you can use. But that one does require an appraisal and the income documentation.
Okay. That's great information. What happens if I don't have a DD 214?
Okay, a DD 214 is the and I'm sure, Joe, you probably received one after you came out of the military. It's basically it has all the information of your service. Okay, so the DD 214, I'll go into VA. I have access to VA. I go into VA and I look up your social security number. And if it does not, most of the time it gives you what is called a certificate of eligibility, a COE. It gives you the certificate of eligibility immediately. But there's a percentage of people that don't have that certificate of eligibility. So I use the DD 214 normally to go in and fill out that information to get them a certificate of eligibility. So the DD 214, if you don't have it, I then have to work with you to remember when your service was, when you went in, when you came out, when you went back in, because you'll see a lot of people with different tours will come in and they'll have 3, 4, 5 different tours of information that I have to enter. And then the VA will issue a new one to you. But it can all be done electronically. I'll just do it online with the VA.
Okay. So I guess, Joel came out of the service because he wasn't aware of all the programs offered to him. And maybe he bought a home without using a VA loan. And now he's selling that home and buying another home, or there was a divorce or something like that. Can you have purchased a home already and not use the VA loan and then come back and use a VA loan for a second home?
Yes. Yes, you can.
Okay.
The only time that you cannot use a VA loan is that you can't have a VA loan where you are trying to do the mortgage with with an unmarried person to you, right? So you can't be Johnny Mateo, veteran, and his girlfriend on the mortgage. That doesn't work. You're not allowed to do that. It's only the veteran going to be on the loan or the married spouse.
It has to be a married spouse. So if you have a girlfriend, that cannot be on the loan.
Cannot.
Okay, that's good to know. All right. Joel, as a person come out of the military after 4 years, would have been great to know a person like Johnny at that point.
Yeah, I would have loved if I can rewind time and we would have met a lot sooner. Johnny's a wealth of information, a perfect person to sit down for people looking to buy a home. I highly recommend. I send the best of my friends. I send over to Johnny, him and his team. They have a wealth of information that I highly recommend. And, to go over there, sit down 20, 30 minutes, you can get a good overview. I'm sure Johnny can talk probably for 20, 30 hours and fill your head with all sorts of stuff. But he wasn't just born yesterday, and I'm pretty sure that he knows to kind of give an overview of 20, 30 minutes or something like that. So, yeah, I would have loved to know you 20 years ago, Johnny. It would have been great. You would have saved me a lot of money, I'm sure.
Oh, my God. It's a veteran has such an opportunity if they want it to get a home 100%, leave that home, go get another home and rent out. They can start building a portfolio of homes and getting themselves ready for retirement. And there's, so many people don't know that you can use your mortgage or your homes as a way of building equity and wealth. And I love that the government has stepped it up for the veterans, because I believe, heck, to be honest with you, I wish that the mortgage was even less, the process was less onerous than it is now for veterans. I think veterans, it should be, hey, you're a veteran, let's get you in there, let's get you your mortgage, let's get you your home for the sacrifices they made. But it is a great program, though, and it's gotten better over the years, especially the construction. The construction one, you can't get 100% construction loan in any other situation other than a VA. A veteran can buy a home, the land, build it 100%.
Oh, good. That's what I didn't ask. So thanks for volunteering that information. So we're getting ready to end up here. And Johnny, we'll start. Any other final comments you want to make that may help our veterans with the loan mortgage process?
It's exactly what Joel said about don't be embarrassed if you feel that your credit score or something is off, and so often you don't want to go into the bank because you don't want to hear what your credit score is. Here I don't judge. There was a time in my life where my credit score was in the 400s. Mm-hmm. I was an idiot as a college student, and I overspent and didn't pay, and I did all sorts of stupid things. So for me, it's just fun. It's fun to fix these things that just people like, I didn't know that little thing can make such a difference in my credit score. There's nothing worse than those who just even going to the doctor, right? Some people don't go to the doctor because they don't want to hear what the prognosis is, right? You got to do it, because if not, it's just getting worse and worse. Your financial health is important, and just come in. Let's talk about it. Let's look at your credit score. Let's see the best way forward, and get you on the right track.
Thank you. Looks we lost me.
The best way forward, and get you on the right track.
Thank you. Looks we lost me. I lost Joel there. Oh, here he comes back in now. Come back in. Good timing. So Joel bailed out a little early.
I'm back. I don't know what happened there.
That's right. So thank you, John. Joel, any last comments about your experience or how a financial institution may be able to help, specifically Timberland, might help a veteran with their finances that we haven't covered yet?
Don't be me. Plain and simple. I learned everything the hard way. My advice, someone coming out of the military, go visit a local credit union. sit down, just walk in and just say, I would like to sit down and talk to somebody about my finances. They would be loving to help you. And it's, again, there's no cost to you other than a little bit of time. It'll save you so much money, aggravation, and credit unions are there to help. So take advantage.
Thank you both for your knowledge and insight today, and again, the willingness to help our veterans. And again, that no judgment zone is important. That if you come into one of the institutions that represent here today, we're not going to judge. We're here to help you with your needs, wants, and dreams. So, thank you again for our presenters, Joel and Slagan, Johnny Mateo. Again, for your financial insights on RV loans and the financial tools. Both were very informative, empowering. It's our goal to provide you with valuable insights that can help you guide your financial decisions. So please don't hesitate to reach out to either of our participants today. Both Core and Timberland are committed to supporting your journey and your financial well-being. So again, you can follow Johnny. How would they want to, if they want to contact you or follow you? What's the best way to get information from Core Mortgage Service yourself?
They can call in at 814-272-0125, or they can come to our website at coremortgageservices.com.
Okay. And how about your social media? Are you on Facebook?
We're on Facebook. We're on Instagram and LinkedIn. So, yeah.
All right, good. Joel, if we have anybody who wants to contact you or Timberland, what's the best way to do that?
Best way, I'd say the website, timberlandfcu.org, or they're welcome to call in as well. 814-371-2676.
Okay.
And we're also on Facebook quite a bit. We're all over Facebook.
All right. Well, good. Well, thank you for both of you today, the valuable insight. And Samantha or Joanne, anything you want to add? And thank you again for both putting this together for our members and our customers. Anything to add for either one of you?
It sounds like, Johnny, I just wanted to add real quick, it sounds like veterans, if they have never had to deal with housing issues and things like that, it can be kind of a complicated process. It sounds like you guys are going to sit down with them and explain step by step.
Absolutely. We, from A to Z. And look, and if it makes more sense for them to rent, we'll tell them that too. But a lot of the times it's a great way to start off their financial future.
Perfect. Thank you.
Okay. So be on the lookout for additional information about our next quarterly webinar. We're excited to continue this series and delve deeper into other financial topics that may benefit you. Thank you once again for joining us, and we look forward to seeing you at our next session. Have a wonderful day.
All right. Thanks, Chad.